Bill and Gina want to retire. They're both in their early 60s, and between them, they earn about $130,000 a year. The experts say they should try to retire on 80 to 90% of their current income if possible. In their case, that's $117,000. Combined, they'll bring in about $30,000 a year from Social Security, so they need to find a way to make up for the $87,000 shortfall. Let's see how that can be done. Fortunately for them, they just paid off their home, and it's worth about $675,000. So that's what they have to work with. Their kids are grown, but live nearby with grandkids too. So they want to stay here and keep the family home if possible. So with those priorities in mind, let's look at using one of Profit Connect's programs to see if we can help. Before they came to us, they first considered a reverse mortgage, but quickly ruled it out because it just didn't put enough money in their pockets, and the interest rate and fees were higher than other loans. They know their answer is going to come from refinancing their home. So they're looking at an equity loan and depositing the funds into the Profit Connect 20% program. Bill and Gina already have a small savings account they opened last year with Profit Connect, so they know and trust them. They also know refinancing and investing is a great option as long as they use a fixed return and a guaranteed program. They don't want to risk money in the stock market. They like the FDIC insured aspect of their Profit Connect deposits. Also, they know it's important they refinance while they're still working in order to qualify for the new loan. So the only question is, how much should they take out? They know they're short $87,000 a year. Plus, they need an additional $24,000 income to make the loan payments as well. The Profit Connect 20% program pays out 20% a year guaranteed. It's guaranteed by the company, and the funds are doubly secure because they're federally insured as well with FDIC insurance. So the math is easy. They need $87,000 plus $24,000, which means they need $111,000 guaranteed from Profit Connect to cover their living expenses and the new loan payment. $111,000 is 20% of $555,000. So that's what they need put into the program to fully fund their retirement and comfortably cover all their living expenses. Even though they just finished paying off their home, the idea of being trapped in their jobs and unable to retire bothers them much more than the idea of refinancing. Bill and Gina love this new plan, but decide to implement the plan with a twist. They decide to only borrow $450,000 now, but to postpone retirement until the end of next year. That gives their new Profit Connect account time to grow to the $555,000 needed. This will cover all their expenses, and they'll retire together at that time. Retiring together really feels like a great plan, one they're excited about.